The RR Motoring Organisation reports that the average price of petrol in the UK has risen to 150.1p per litre, the highest amount since last November. According to data, the average price of diesel increased to 158.3p per litre on Monday. Experts attributed the increase in oil prices to the Middle East tensions as well as the pound's depreciation against the dollar. Retighten their belts on other spending, was the AA's prediction for drivers. The price of fuel and diesel increased in March, despite the fact that overall inflation, a measure of the rate at which prices rise, has decreased. According to Luke Bosdet, the AA's spokesperson on pump prices, inflation has been heading downward at quite some speed, but petrol's rebound to 150p a litre leaves a big boulder in the road. Fuel Prices Online, a market research company, analyzes data that the Competition and Markets Authority (CMA) gathered from almost 3,000 forecourts to determine prices. According to data, on Monday, 28.1% of the forecourts charged at least 150p per litre for petrol, which represents an increase from 23.8% 1 week prior. However, Mr. Bosdet said that filling up may not get much worse in the short term, and that fuel prices are unlikely to be elevated for long, given that wholesale costs had somewhat eased recently. Following Israel's retaliatory strike on Iran last week, oil prices surged and have since dropped. Given that there will be some lag between spot crude oil prices in financial markets and prices on the forecourt, the latest rise is perhaps not so surprising, said Caroline Bain, chief commodities economist at Capital Economics. Even if Brent crude, a crucial benchmark for global oil prices, has decreased from last week, it is still 13% higher at $87 per barrel than it was at the beginning of the year. Distress at the petrol pumps. Ms. Bain continued, "We think that oil prices may well rise in the near term if there is a further escalation of tensions in the Middle East, but that they will start to fall in the second half of this year." Drivers were really starting to feel pain at the pumps, according to RAC Fuel spokesman Simon Williams, but he asserted that a lot of that was dependent on the margin that retailers would choose to take. Higher margins always mean higher prices for drivers, he stated. As recently as last month, the competition watchdog raised worries over rising retailer margins, or the gap between what a shop pays for fuel and what it sells for. The CMA stated in March that it was concerning that these margins had continued to rise. One of the main conclusions of a market study it released the previous year, according to which there is less competition in the fuel industry, was implied to be true. The CMA investigated the industry after growing concerns about fuel prices, and found that certain retailers were overcharging. It was discovered that, in most cases, drivers must shop around and compare costs while they are out and about. In response to the study, the government proposed the Pump Watch program, which would guarantee that fuel prices were updated in almost real time so that drivers could compare costs using price comparison websites, sat-navs, and navigation applications. Ongoing consultations are being held over the plan.